Hello friends, myself CA Sayali Thakur. I hope you all are doing good and taking a good care of yourself in COVID-19 situations. I wanted to share with you all the different concepts and topics in accounting. This is my first video, and in this I will be sharing with you all some basic concepts in accounting which will be helpful for the beginners and those who want to know accounting as a subject. So, if we want to understand the accounting, so first we need to know what is accounting. So, accounting is an art as well as a science. R.N. Carter, a very well-known person in the field in accounting field, he has done a lot of research in the past, and as per him, the definition of accounting would be bookkeeping is the science and art of correctly recording in the books of accounts all those business transactions that result in transfer of money's worth. Here he want to basically say that doing a business is important and also recording the transactions in the business is important too. In accounting or bookkeeping, there are certain assumptions. Basically, like in any other science, there are assumptions. In accounting also, there are certain assumptions, and based on those assumptions, the books are maintained. So these are the base of writing the books of accounts. So today, the first concept which I'm going to explain is accrual concept. Now, what is accrual concept? This concept assumes that the transactions are recorded in the books of accounts when they occur and not when the cash is exchanged. Revenue is booked when it is earned and not when it is received. So now what does this mean? This assumption tells that whenever, for example, if I purchase some goods or if I purchase an asset, so the transaction should be recorded when the material is exchanged. So that is the point when I should be writing the transaction in the books of accounts and not when I am exchanging the cash for it. The cash can be exchanged later on. So same case with the revenue. Like when I'm selling any good, so I will be recording in my books when I sell a particular good. I will not wait for the transaction to be recorded till I receive the money. When I sell the goods, the transaction will be recorded. Same case with the expenses. Whenever I incur any expenses that can be of any nature, like purchase of material or paying salary to my employees or paying any other third person for any services which I take from the third person. So the transaction will be recorded when the incident takes place, not when I actually pay the money for that transaction. If to explain it in more detail, like when a person receives the material receipt is done and the purchase transaction is recorded and not to be waited till the money is shared or money is transferred. So this is the accrual concept. Second concept we are going to look into is the going concern concept. Now what is going concern concept? In this concept, it is assumed that the entity for which the books are being maintained or transaction entries are made will be in business for long time, which tells that we are maintaining books of accounts of organization which is to be there in future, which is not going to stop abruptly anywhere in near future. There are plans of business for expansion, for growth, or for continuity in coming years. So this concept basically in align with the accrual concept as I explained earlier. So whenever I book a transaction for sale or for purchase, but the money is not yet transferred. So that can be transferred in next year or any other further period. But the entry is recorded keeping in mind the second concept, that is going concern concept, that though the money is not transferred, the transaction is occurred and the business will be continued, so we are booking a liability. So the going concern concept assumes that the business is in continuity. So the next concept which I am going to take is the matching concept. Now what is matching concept? This concept assumes that the expenses related to a particular income must be recorded in the same period. That is, both expenses and revenue are booked in the same period to get the correct result of an organization. Now, what does this mean? So, if I am into a business of selling some watches, so I should book the entry of my sale. So suppose I sell some watches, so I book the entry of sale. Now, before selling this watch, I had to purchase that watch from some other third person. So that is my purchase entry. So that is the cost to my organization. And after incurring that cost, I sell it to another person. So that is my sale. So I should be recording in my books of accounts both the entries, that is the purchase and the sale. So I am booking or I'm recording the cost part and I'm recording the revenue part. So here basically I'm doing a balancing act. This way it should be kept in mind that this concept should be applied to each and every transaction. This is a matching concept. So you cannot just record your revenue part and don't disclose your cost part. The cost part should also be disclosed. Then and then only the actual or the real result of the company will be disclosed. So the matching concept should be kept in mind in each and every transaction. Next concept we will be looking into is the materiality concept. It's assumed that all the material transaction in relation to the said organization are reported in the books of accounts. Now, what is material transaction? It's a transaction, if omitted, will impact the analysis of business. Now, what is a material transaction? A transaction, any transaction which is important or which is in relation to the organization should be disclosed in books of accounts. We shouldn't hide any transaction relating to the organization. May it be revenue or may it be cost. Both nature transaction should be correctly informed in the books of accounts, because the books of accounts are a very important part of an organization because they reflect the health of the organization. So if any important transaction is not disclosed, then it will not show the true picture of organization. So it is the duty, I would say it is a legal duty also of any bookkeeper to write and to disclose each and every transaction related to the organization. So today we have covered these four concepts, and I hope this was really helpful to you to understand these concepts. I would be taking some more concepts as well as accounting topics in my next coming videos. Here, I would like to tell all my viewers that it will be great helpful for me if you share your views as well as your requirements, like which all topics I should be covering, and in which they feel that they need some more understanding. So I would be really happy to cover those topics. And that's it for today. I hope you had a good time watching and hearing my video. Thank you very much.